You're still watching in TVC News at 7. Let's turn our attention to business following the OPEC Plus monthly oil market report. Minister of State for Petroleum Resource Oil, Senator Heineken Lokpobiri, says measures are being taken to address the shortfall in crude oil production to restore production to previous levels and increase it. The minister made this known in a statement that the decline was due to maintenance activities carried out by some oil companies and issues countered on the Trans-Niger pipeline. He also reveals that the ministry is engaging in policy evolution to maximize the utilization of all available wells in the country to enable the country to revamp our production and generate revenue to stabilize foreign exchange reserves. Senator Lokpobiri assures that the issues have been addressed and production will soon be restored to 1.7 million barrels per day. The minister wants all to remain committed to ensuring the sustainability and growth of Nigeria's oil sector, which plays a crucial role in driving the nation's economy. And now the International Monetary Fund says inflation is easing globally faster than expected but has not been fully defeated. IMF Managing Director Kristalina Georgieva in a statement said this at the China Development Forum 2024 in Beijing. She is urging central bankers to carefully calibrate their decisions on cutting interest rates to incoming data. The managing director said headline inflation for advanced economies was 2.3% in the final quarter of 2023, down from 9.5% just 18 months ago, and the downward trend was expected to continue in 2024. According to her, this will create the conditions for central banks in major advanced economies to begin cutting rate in the second half of the year. She urged policymakers to resist calls for early rate cuts when necessary. And our food insecurity remains a pressing issue globally, affecting millions of individuals and communities, including those in Nigeria. The federal government has been actively engaging in addressing this critical challenge through a series of concerted efforts aimed at ensuring food security for its citizens. Founder and Chief Consultant at B. Adedipe Associates Limited, Dr. Abiodun Adedipe, on our flagship program Business in Nigeria, suggested ways to address food insecurity in the country.
3 key things here. Number one is we don't do all-year farming. Most of the farming we do in Nigeria is still rain-fed. So if we are going to do year-round farming, it means intervention has to also come in the area of irrigation, all right? Which means wherever we can cultivate, there'll be deliberate infrastructure investment in that particular area. On the one hand, where government can, and then on the other hand, providing incentives for private investors to go into that. So if we are able to do that, then our agriculture will transition from rain-fed cultivation to year-round cultivation. That's number one. Secondly, from the data available, we understand that 60% of our agri output in Nigeria goes into post-harvest losses. So how do we prevent post-harvest losses of up to 60% of the output? And that's quite significant. That brings in the other 2 legs of what I will recommend here. The first is we need to invest more in storage facilities. Again, I will recommend what I just said now about irrigation system. And that is where government has capacity, let them do what they can. And where we cannot do much as is required to achieve our objective of reducing to the barest minimum post-harvest losses, then we need to create a model that will attract private investment.
And now the stock market closed the week in the negative territory. The trade index measuring price movement dropped by 0.71% to ease market capitalization. The list of losers was led by Dangote Sugar Refinery PLC, followed by Guaranteed Trust Holding Company PLC, then Flour Mill, Multiverse Mining and Exploration PLC, and Dangote Cement PLC. On the gainers list, the Transactional Corporation PLC recorded the highest gain of 9.93%. Others were Morrison Industries, Oando PLC, Cavitin Offshore Support Group PLC, and Deep Capital Management and Trust PLC. Let's take a look at the global equities fund tradings now. Equities struggle for direction earlier today as investors look for clues on the timing of Federal Reserve interest rate cuts amid the murky U.S. inflation outlook, although the mixed geopolitical and policy prospect helped gold hit a fresh peak. Japan's Nikkei up by 0.23%, while tech shares led the way, drawing inspiration from a rally in U.S. peers overnight. Elsewhere, market mostly suffered losses at South Korea's Kospi slid 0.9% and Singapore's Straits Times index was up 0.26%. The worst losses were in Hong Kong, with Hang Seng index shedding 1.65% as property shares weighed. MSCI's Broadex Index of Asia Pacific shares outside Japan slipped by 0.67%, cutting its gains for the week to just 0.18%. Pan-European stocks 50 futures pointed 0.7% higher. Meanwhile, the U.S. stocks futures were flat following a 0.7% rise for the S&P 500 and 1.7% surge for the tech-focused Nasdaq. And in the meantime, President Joe Biden faces pressure to halt Chinese EVs import amid concerns over national security. According to the chair of the Senate Banking Committee, Senator Sherrod Brown, Chinese electric vehicles are an existential threat to the American auto industry, while other U.S. lawmakers have called for steep tariffs to keep Chinese electric vehicles out of the country. Recalled in February, the White House said the U.S. was opening an investigation into whether Chinese cars pose a national security risk. It warned cars that are connected to the internet regularly use their cameras and sensors to record detailed information on U.S. infrastructure, interact directly with critical infrastructure, and can be piloted or disabled remotely. Now, Singapore Central Bank has left its monetary policy unchanged in line with expectations as authorities look for signs inflation in the city-state was moderating before loosening. According to the Monetary Authority of Singapore, the nominal effective exchange rate will be maintained. That is the prevailing rate of appreciation of its exchange rate-based policy. But the width and the level at which the band is centered will not change. This is needed to keep its restraining effect on imported inflation as well as domestic cost pressures and to ensure medium-term price stability, says. Economy says it is too early to pull the trigger on easing, considering that CPI will step down in the fourth quarter of 2024 into 2025. However, the Monetary Authority of Singapore expects the economy to strengthen over 2024 and inflation to stay on its moderating path and step down in the fourth quarter before falling further into 2025. And in the crude oil space now, prices are set to run this week on the positive side, with worry that interest rates in key markets will remain high, dampening demand for the commodity. U.S. West Texas Intermediate crude sold at $85.95 per barrel with an upsurge of 1.09%. Brent crude futures also experienced an uptick of 0.92%, selling at $90.57 per barrel. And Bonnie Light recorded an upward price margin of 0.64%, selling at $92.21 per barrel. And for the OPEC basket, crude oil dealers offer $90.39 per barrel with an upward price review of 0.11%.